Good evening, this is Finance Today. I'm Mila Hanim. Tonight, we take a closer look at the fundamentals of investing, from investors' objective to understanding market risk, regulatory bodies, and investment instruments. One major investor objective is capital appreciation, where the value of investment grows over time. Many Malaysians aim for this by purchasing stocks like Maybank or Petronas Chemicals. Another objective is current income, focusing on stable earning such as dividends and profit sharing from sukuk and REITs. Parents also invest in children's education, often through public mutual education and SSPN accounts. Finally, and to reduce risk, investors practice portfolio diversification, mixing assets such as gold, equities, real estate, and unit trust.
Thank you, Mila. Let's move on to investment risk because understanding risk is just as important as understanding returns.
There are systematic risks which affect the entire market. For example, inflation risk reduces the real value of return, while interest rate risks affect bond prices when Bank Negara raises rate. Another major systematic risk is market risk, where the whole economy experiences downturns, like KLSE falling during global recessions.
Then we have unsystematic risks, which affect individual companies. These include poor management, worker strikes, or shortages of raw materials. The advantage is unsystematic risk can be reduced through diversification, combining stocks, gold, unit trusts, and properties.
Now that we understand risk, let's explore where Malaysians invest their money. Starting with the structure of our capital market.
Malaysia's official exchange is Bursa Malaysia, one of Asia's largest with over 900 companies. It offers equities, bonds, sukuk, ETFs, and REITs.
Bursa has three markets. The first is main market, which are for established corporations, S market, which are for high growth companies, and lead market, which are SMEs for sophisticated investors.
Above all this, we have the Securities Commission Malaysia or SC, established under the Securities Commission Act SCA 1993. The SC oversees development of the capital market, enforces regulations, and ensures transparency.
And investors can trade directly. They must go through registered stockbrokers who connect them to Bursa Malaysia.
There are three key services, which includes execution, which is the broker carries out orders, advisory, which the broker suggests trades, and discretionary, which the broker has full authority.
Before we begin our interview, let's take a look at the investment instrument available to Malaysians. Gold is often used as protection against inflation. Unit trusts offer professional management and diversification. Real estate provides rental income and long-term appreciation. Bonds give stable interest return but can be affected by rising interest rates. Stock represent ownership and potential dividends. And finally, ETFs bundle multiple assets into one investment and trade like regular shares. Joining us now is Ahmad, a respected financial expert. Thank you for being here today. Let's dive deeper into this instrument, starting with gold. Why do investors rely on it?
Gold is considered as a safe haven asset. It protects purchasing power during currency decline and inflation, although its price may be fluctuate short term.
And what about unit trusts? Why are they popular?
Unit trust pool funds from many investors are managed professionally. They reduce risk through diversification and are ideal for beginner or long-term investors.
How do real estate and bonds fit into a diversified portfolio?
Real estate generates rental income and capital appreciation, but it requires significant capital. Bonds provide predictable interest return to their value falls when interest rate rise.
Finally, could you compare stocks and ETF?
Stock offer ownership in a company and potential dividend, but are volatile. ETF provide diversification in a single product with a lower cost, making them beginner friendly.